Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index held below the 100 level on Tuesday after coming under pressure in the previous session, as markets continue to assess the impact of Middle East tensions and volatile oil prices on growth and inflation. Looking ahead, the Federal Reserve is widely expected to keep rates unchanged on Wednesday, with investors closely watching how policymakers interpret the recent surge in energy prices and its implications for inflation. WTI crude is trading near $95 after pulling back sharply on Monday as supply fears eased slightly. The move came as some vessels managed to pass through the Strait of Hormuz, reducing immediate disruption concerns, while US allies declined calls to assist in securing the route. Despite the pullback, oil prices are still up nearly 40% since late February, driven by escalating geopolitical tensions. Meanwhile, the IEA signaled it may release additional reserves if needed to cap further price spikes. Gold hovered around $5,000 on Tuesday, remaining close to its lowest point in nearly a month as traders reassess the macro outlook. Ongoing conflict between the US, Israel, and Iran continues to drive volatility, particularly with attacks targeting regional energy infrastructure. Elevated energy prices are fueling concerns that inflation could remain sticky, potentially reinforcing a more hawkish stance from central banks. At the same time, geopolitical uncertainty continues to underpin safe haven demand, even as policy expectations limit upside momentum. The Japanese yen weakened back toward the 159 level against the dollar on Tuesday, reversing gains from the previous session. Verbal intervention from Japanese authorities has so far failed to halt the currency's decline. Meanwhile, Bank of Japan Governor Kazuo Ueda noted that underlying inflation is gradually moving toward the 2% target, but uncertainty around the Iran conflict is expected to keep policy unchanged this week. Euro remains driven by shifting expectations around ECB policy, with markets now leaning more hawkish amid rising energy-driven inflation risks. According to Vanguard economist Rodriguez, the scale and duration of the Middle East oil shock will be critical in determining whether the ECB shifts away from its current stance. If the shock proves temporary, the ECB may stay data dependent, but a sustained rise in energy costs could force policymakers to tighten policy again by 2026 to anchor inflation expectations.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.